Good evening, everyone. We are so glad that you could join us today. We are always excited to be here and discuss as a community ways to improve our financial literacy. There's no such a thing as having too much knowledge, right? So we're all here to learn together, to share what we've learned, and then so that we can exchange ideas. So today, I'm your host. My name is Dr. Sharon UWANYUZE. I'm very privileged to always be here with my people discussing things that matter. Money matters to everyone, young and old. So we'll be here to learn together. And joining me today is Miss Happiness UWITONZE. And we want everyone who is here live to feel welcome. Feel free to share your comments in the chat. We'll have somebody monitoring the chat. And also, please ask questions at the end. And if you do get to see this recording later, please feel free to also leave us a comment on the video. When you watch it, we'll be happy to get back to you. So we'll go ahead and get started without further ado. So Miss Happiness, tell us a little bit about yourself. Why does this topic today being beyond the piggy bank, setting a financial future for your kids, basically, and where we can narrow that down into a subtitle that we can call The Perfect Life for Juveniles. We're going to be exploring that today. So maybe to get us warmed up, why don't you tell us a little bit about yourself, and also what does the term a lasting gift mean to you?
Yes. Thank you, Sharon, for this opportunity. Well, like she said, my name is Happiness UWITONZE. I recently became a mother. I have a 5 month old daughter. And well, like you said, money is very important, young or old. And money, matters of money have become more important to me now as a mother because I want to leave my child or empower my child with money, like with financial knowledge. When I was growing up, I didn't have the chance to be given financial tools. Well, my parents never taught me how to save or invest, or even in school, I never learned how to do that. And I want now, no, now that I'm grown, now that I have worked, been in the working industry where I have had to pay my bills, where I have had to save money, so for a rainy day. I know how hard it is if you don't have knowledge from, your parents or school. So with that passion, I want to give my child all these tools. I want to teach her how to save money and also not just teach her, also prepare financial journey for her. So you asked what gifts a lasting gift means. Of course, when you grow up, um, gift priorities changes. So right now, my gifts have completely shifted the 360 because before I used to think gifts are tangible things, but now as a mother, I don't think sorry, not tangible. I used to think gifts are things that like toys. Well, now that I would think, you'd think toys or clothing, things that they're not meaningful. But now that I'm a mom, I think I believe gifts are education, value, property, financial tools, like I said, such as life insurance. So these things create impact for years, even for generation. So that is what uh, a lasting gift means to me. It is something that continues to provide over time. Yes, memories are powerful, but our everlasting gift has tangible value that grows or protects over time, like life insurance.
That's a great answer. And I think you touched on some 2 points that I would like us to explore more in this discussion. So one is the concept of
Mhm.
generational wealth. So I think it's becoming more prevalent now. We're starting to realize and wish that we had parents and grandparents who had left us a legacy of finances, meaning that we get to start off somewhere. We don't start from zero or negative. We come in already, having some cushion to get us through life. But obviously, not all of us were fortunate to have parents that had financial literacy and, they gave us the best that they could. And like a young mom, I'm sure you definitely want the best for your kids, and you're using the tools that you have access to right now to be able to get that going right away. Like long time ago, they used to try and buy plots of land, maybe do things that or save up for an education. But right now, there are more things that you can do for your child. So I'll be happy to explore that concept more with you as we go through the discussion. And the other one you touched on is life insurance, right? So that term, I feel like gets used here and there, but I don't think we all actually understand what it is. I personally thought that life insurance is, something that maybe people who just started families have, just so that when you die, your dependents, if you die before your dependents leave the house, right, they don't like go off on the streets. While that is true, there are new products now. I'm sure you're going to elaborate more on that to like what life insurance plans you're looking into. But I'm sure the one called Index Universal Life Insurance is one that I know we've talked backstage, you're looking into it. So I would like us to, just for everyone in the audience or who is watching this, just so that we're on the same page. I'm a teacher by profession, so I like to make things clear. We don't assume that you know things coming in. I'm sure you're all very knowledgeable, but it's always good to start off on the same floor. So we're going to take a few minutes, just do some introduction definitions, and then we'll get back into our Q&A with our awesome guest here today. So I'm going to share my screen, and for the audience, if you still keep hearing a term that you don't know, please post it in the chat, and then we'll be sure to address it as we go. So right now, we're going to move into defining what is life insurance. Who needs life insurance? Do you have to be a certain age to get life insurance? And I just mentioned to everyone, kids here are our focus tonight, but you may not have kids right now, right? You may be a young adult that is looking to have kids one day in the future. What can you do about your life right now? Or you may be a young parent, like Happiness and the husband, or you may be a middle-aged or older parent. What can you do right now? So we're going to address some of those things as we continue. So let me share with you briefly some slides and definitions here. So we're going to, again, discuss this question: what is life insurance and who needs life insurance? So life insurance is generally a financial product that provides a lump sum of money to members who have been paying a monthly premium or monthly fee to themselves if they get sick, critically sick, or to their beneficiaries in case of death. Right, so it's a product that is designed to offer you and your dependents financial security and peace of mind in case you don't have a steady stream income coming in. So who needs this, right? If you can answer this question, do you or anybody else in your life depend on your monthly salary or income right now? If your answer is yes, we all do need life insurance. If you have a mortgage, if you have student loans, if you have obviously kids, if there's anyone in your life that can benefit from or need your financial support, either to pay your bills or to pay their bills, this is a product for us. Now, obviously, there are many products under life insurance. So there are two main ones that I want to address that are most common. So one is called term insurance. You can think of this as rent, right? When you go to when you need accommodation, you can either rent or you can buy a home. There are obviously clear differences. So this is also similar to the two types of life insurance that I'm going to address. Term, just like rent, is cheaper on a monthly basis. So here you can get, you pay a smaller monthly fee and then you get those living and death benefits within that set amount of time. So that time can last from either 5 years, 10 years, 15, 25, 35 years, right? So you get a certain term, hence the name. Now, it's important to note that when you do exceed that term, so say you got a 10-year term and then you don't get sick during that time or nobody dies during that time, and then you try to renew it or get a new one, obviously by then you're going to be older, so your premiums are going to be higher. So when we say the term premium, it's that monthly fee that you pay, just like your car insurance or your health insurance. We all pay a monthly fee. So it's also important to notice that in term, if you don't use up that money within that specified amount of time, you're not going to get it back, right? It's almost like, again, your car insurance or health insurance. Now, that's what we mean by no cash value. So there's no monetary value that is left or a refund for all the money that you paid during that short or specified length of time. Okay. So the second type of life insurance, and the one that we would recommend our people to get, is index universal life insurance, because in addition to protection, it also has that savings aspect where if you've been paying a monthly fee for some time, you don't lose it just like that, because you've gotten older or you passed the amount of time that you thought you would need it during that time. So how does this actually work? It is great for long-term planning because it has two main aspects. The protection gives you living benefits. That means if you get cancer, if you get stroke, if you get some sort of disability where you cannot do the daily activities like feeding yourself or bathing yourself or moving by yourself, those are living benefits. Or, unfortunately, the person passes, you get money for under that umbrella of protection. The other aspect is accumulation of cash value from investment. So part of your monthly premium or fee goes towards a type of saving where that money is invested to build for you higher. Now, the rate at which this grows is typically around 7% or more, whereas keeping that money in a bank will earn you like 0.01%. So obviously, you want to keep your money where it's going to grow the most. Now, in life, we all face these three scenarios. Either you live too long, which can be a blessing in itself, but a blessing in disguise, which can hurt your dependents if you didn't save for yourself or plan for yourself, and you tend to get sick, or unfortunately you die too soon. So those are three scenarios that tend to happen. You live a long life, which is great. You get sick, whether you're young or old, or you die too soon. So this is a type of life insurance, again, that can address those three aspects. So just to wrap up this definition, again, I've just mentioned to you the living benefits. Those are illnesses that we are going to talk about, and I'm going to be discussing them more with happiness here. How is this relevant even to kids, right? We know that unfortunately kids get cancer, kids, can get certain hard illnesses. Even us as young adults, we can be strong and healthy one day. We never know what can happen to us. So that's why it's important to always, safeguard our lives. We have to protect our cars. When you have a car, you have to pay insurance. You don't have a choice. We have renters insurance, we have mortgage insurance. It's important to protect our lives as well, because we know that illness is part of life. So again, just to highlight the key things that I've mentioned to you under Index Universal Life, you do get your death benefit. In case of death, your dependents get it, so that if they were depending on you as a parent to survive for their daily needs, that income will take care of them. They're not going to throw them on the streets because now, they can't afford rent or mortgage. You do get that cash accumulation, which helps you in retirement. So that's the long-term savings. You can borrow from your savings. That's what we call here your income tax advantage distribution. So those are, you can borrow from yourself and you put it back so that it keeps growing. And the unique thing about this too, unlike stocks, unlike putting your money in stocks where they can grow really high and then fluctuate, with this type of saving or investment, there's what is called the market flow rate, meaning that it cannot go below 0.25%, which is still higher than the rate that your banks give you for a typical savings account. So it can only grow up, but it can't grow down. Obviously, there's a cap to it, but it's not going to fall where you lose your money. And last but not least, here is we can see that you can take out your money in case you need it for an emergency. You need to buy a car, you need to put down payment. If you have been building this amount of money for some time in your savings, you can use it. So I'm hoping that with that introduction, all of us here in our audience, you at least have some terms in mind that we can build off of. That way, if you hear a term, you know what we're talking about. But if you still have any questions, please feel free to ask in the chat or later. So now to our guests, let's go back to the discussion questions here. So now that we've talked about this gift, right? This Index Universal Life. How do you see that being a perfect gift for your children, happiness? How would this start helping them, with savings, even while they're still young and healthy?
Yes. IUL is a perfect gift for my children or my family because it offers both life insurance and long-term financial growth. Like you said, with savings account, they have a little interest. Also with like mutual funds, they with the market, if they come with the market risk. But with IUL, your money is not risky. Your money is not gonna go. You won't lose your money. So I think it's a great perfect gift because I know that my money is safe for my children or for my family, and there's also financial growth. So it's a protective tool and investment at the same time. So it covers also, you touched on how it covers emergencies and offers potential. It's a potential so maybe for example when you mentioned when someone gets sick or your child gets sick, you have to go to the hospital and there's medical bills. So with this IUL, this money can be able to pay those medical bills or even help you as you're in the hospital. So I think it's a great asset to have because it helps either in financial growth and also as a protection to your family.
That's wonderful. So let's elaborate more on that aspect. Do you think that maybe a baby is too young? Like, why are we already thinking about, you know, those chronic illnesses, critical illnesses? Aren't they too young? They're already healthy. Like, why should parents think about, again, getting them started as young as possible, or even if they have other like teens or young kids in the home? Why is this such a perfect gift for a birthday, for a sweet 16, instead of the typical things that we get them, as parents?
I believe this is important. It doesn't matter what age because money, young or old, money is important, right? So with little children of young children, the benefit of this is because when they're younger, they're healthier. So the risk of them being denied is lower. Also, the premium or the monthly payments to these policies is lower. But it doesn't mean oh, now that I've said this, someone might say, oh, my child is maybe over 18 years old, or the premium, oh, I don't want to pay that premium because it'll be a lot of money. No, it's not late to set up your children. You can the good thing about this IUL, it's flexible. You can start with little money, not little money, but somewhat where you're comfortable, and then with time you can add on your policy and add more money. So it shouldn't discourage anyone who is here who has a child who's older. It shouldn't discourage them to help or give their children financial tools. So that's why I think age doesn't matter with this product.
That is a great answer. I do want to emphasize that last bit that you said, that it's a flexible tool or product, in that you can get them started as parents, but then even themselves, because they are the policy owners, meaning that, they have full control over how they keep contributing to the money, or even what they use the money for later. So let's say you start a policy for your child that is 15, 16, and then they go off to college, and then after 4 years they graduate and they get a job. So they can they can increase that monthly fee and increase how much they are putting into their savings and their living benefits, and their later planning, basically for retirement planning, or these savings that they can then use later on to start off their mortgage payments or other bigger assets in their lives. So that's a really great point that you bring up there. The other thing to emphasize is, again, while majority of us always expect that the younger you are, obviously the healthier you are, that's the general assumption too. So that's why the monthly fees tend to be lower. But again, life is not guaranteed. Somebody can go out there and get an accident, and then you have a disability. So, and these happen to both young and old. So you do need extra help in that case. However, this opportunity to get an index universal life insurance policy at the lowest monthly fee possible is only available in your youngest, healthiest state. So the more things you bring in, like if you have pre-existing conditions, the fee is going to be slightly higher. So that's why, the best time to have gotten this information was yesterday. The next best time is today. Information is power. Use what we know today to safeguard our tomorrow, because we don't know what can happen to us any day. Now, let's get to that exciting topic or subtopic that we talked about earlier. What do you understand when you hear the term generational wealth? What does it really mean for you and your family?
Yes, this word is thrown here and there every day, but to me, it means passing on assets, like I've mentioned before, that allow future generations to start ahead, whether money, property, or business. And in this case, IUL. We all know about the Rockefeller family. This is how the rich families keep getting richer, because their families set them up. So generational wealth to me is helping my children and my future grandchildren, helping them start ahead, not start from zero. So well, some of us go to college, and when you're done with school, you're ready to go into the working world, you're starting from zero, because you have to pay the loan back, Sallie Mae or the government, and then there's bills, and then you have to pay the bills, and also you have to save. So you're literally starting from negative. But with generational wealth, you have a cushion. There's money that is set up for you, and this money can help you, I don't know, buy a car if you need a car, or maybe even help you start a business. So to me, generational wealth is me having access or tools to give to my children, or my future children or grandchildren, financial tools to go ahead in life. So with of course, are you well with all the policies giving money and using this money while they're in school or to buy a car or property? This is generational wealth to me because it provides my child, it will provide my child or my daughter a cushion for the future. So that is what generational wealth means to me.
That's a great answer. So now, when we hear that word wealth, sometimes it's very easy to take ourselves out of that bracket. Like, oh, I guess those are things for the rich already. So let's dive deeper into that idea. Is this something that an average person can do? Is this something that is accessible to, the average person?
Yes.
What can you say about that?
Yes. So when you mention wealth, a lot of people, even myself would remove myself from the bracket because I am not wealthy. But with IUL, it is like I mentioned before, it is flexible. Whatever amount of money that you have, you can start from that money. You don't have to sign up for a policy of $2 million. No, you can sign up for something that is flexible within your budget, and then from that you can add on depending on what you want to do or your financial goals. So this is the best. This is the best. This is why IUL is a perfect gift because it doesn't exclude anyone. Whether you're rich or you're with the 1% or you're not, it does not exclude. It's a very good product because everyone has access to it. Everyone can invest in it. Everyone can it can benefit them. So that is why if you're here and you think, oh, I'm not wealthy, no, you IUL is a perfect product for you because it helps anyone. It is flexible. You can start with a little money that you have, and then you can keep growing depending on your financial goals.
Mm, that is some great news. And maybe just to put in a disclaimer there. So we keep saying that this is something that is flexible. If you would like to know how this can work for your specific budget and income, we're going to be providing information later on how you can contact our team to set up one-on-one meetings, so that, a financial professional can explain to you how this product can be adjusted to meet your needs so that you don't overstretch yourself, because at the end of the day you want to do something that is sustainable over time. You don't want to just start and then like crash, or stop. You want to do something that is sustainable. I have to give a personal example here too. Even as students, right? I started this as a student. I'm sure Happiness will be sharing her own personal examples too, that you can start from wherever you are, as long as you have an income, however small or big it is, you can start, because the sooner you start, the more the savings portion and investment portion can start growing, and the more you're protecting yourself, because again, you don't wait to get a certain amount of money before an issue can happen, right? And life is the most precious thing. It's the only thing that you can't trade. You can lose your car, you can lose your house, but if something happens to your life, that's a big problem. Okay. So now we are kind of getting to the last quarter of our discussion here. So audience, if you want to, this is a good time to start thinking about those questions to engage our guests, and so that we keep it lively. Now let's talk about reflect. Again, I just started sharing more of the personal experience. So let's use this aspect of reflection. How do you think your life would have been different if your parents or grandparents had an index universal life insurance policy that they had left you when you were still a baby, basically? How would your life look different from the way it is right now?
Well, first of all, if my grandparents understood money, it would have given me a peace of mind, hardship, or even covered medical bills for them, or even for me or my family. Um, I wouldn't have just scrambled in life, just learning how to save. And okay, so when we're in college, because we don't have a concept of money, you would put you put all your money in a savings account, and when you're about to buy something, then you transfer. So it's like always transferring money from the savings account to your checking account. So if my grandparents had done this, first of all, that means they would have had financial education. That means I would have financial tools. I wouldn't be in the position that I was a few years ago. That I wouldn't be in that position because they would have first of all given me financial knowledge, which is very, very important. You can have all these things, but without financial knowledge, it's useless, basically. So going back to your question, it would have avoided a lot of things, hardship, even it would have even covered my education. So it would have changed my financial story and provided a stronger foundation for my family.
Mm. Wow, I totally agree. Again, right now, so there are a few different options that parents currently do to provide that cushion for their children. Some of the more common ones are, say, the college fund, right? So we know, okay, we know college is getting more and more expensive. So some parents do set up those college savings accounts for their children. What can you say about that? Why should a parent consider an index universal life insurance policy versus, let's say, a college savings account?
Okay. Um, Personally, before I was privy to this knowledge of IUL, that was my thought that I would do a college um account where I'll save all this money so that it would help my child, in college. But the thing is, when you're saving, let's say $50,000 in this account, that money is considered as income. It is taxable. That's number one. And number two, if your child is requesting financial aid, they're gonna count that money. That money, they're gonna start from that money to give them their financial aid. But with IUL, that money is yours. They will not look at that money. That money, if you get a scholarship, can be used to do other things. So that is why IUL is more beneficial than a college fund or a college account. Also, this money with college accounts, it's only for college. But this with IUL, you can remove this money and use it for anything that you want to use it. Buying a car, purchasing a home, or even using it when you're sick. You can use it when you're sick to pay all these emergency costs. So that is why I think IUL is really beneficial and is a powerful financial tool.
That's wonderful to know. Yeah, that's why we are all here. We're all here to educate ourselves. We learn from putting ourselves there, being open to accepting and, new information that we didn't know. I myself also only knew about, basically a regular savings account or a college savings account. But I feel like this newer product, the IUL, is a revolutionary product that kind of touches different aspects of life. And, we want to give the best to ourselves and to our dependents. So maybe a last question for you here is, what do you think are the biggest risks that people think about, and those things prevent them from starting early or starting something like this, right? Like, what are some things that you think people are like, I'm not so sure I get this, so that we can help identify those potential issues and address them in this discussion?
Yes, it is very important to talk about this risk because when you wait longer, you could be at a risk of paying a higher premium or a higher monthly payment because you waited longer. Also, there's losing eligibility due to health coverage, sorry, changes, and missed years of compound growth. So let's say you're older, you have a disease, so it will lessen your chances of getting approved If you wait, you wait. But if you sign up when you're younger, then you're healthier. So then your chances of getting approved are more or higher. Also, delays could cost thousands in loss of value and risk leaving my family unprotected. Let's say, for example, you wait longer, you die, then obviously your family is not protected. So that is why it is very, very important to sign up as early as you can. Like Sharon mentioned, you said a quote, if it was yesterday, something yesterday or today. Anyways, never mind. So what I'm trying to say is sign up as soon as you can. It's very important because as if you wait longer, then you're at a risk of losing this great product.
Mm-hmm. Yeah, I think that's definitely a wake-up call. To repeat that quote again, I saw it somewhere and it has stayed in my mind. The best time to start was yesterday, the next best time is today, right? And again, this information is applicable to, even if it was really focused to minors and to people with children. If you're a single unmarried person without kids, this is still relevant to you because you're the youngest you ever be today. Tomorrow you'll be a day older. You can start planning for yourself and for your future. If you are already a parent or an empty nester and you don't have a policy, you're the youngest today, right? So the longer you wait, this is a privilege, right? Not everybody that applies gets it because they have to check your health status, so that you're not a liability to them. So we learn together and we want to grow together as a community. So let's take this close to heart and as a call to action. So I do want to share some final thoughts here, maybe to wrap up everything that we've said. I will share my screen. That way, you can visualize it if you're also a visual learner. So again, some key questions that our great guests kind of got us to think about here is, if there are three main things: income, family, and debt, right? If you have an income currently, without your income, right? If say something happens to you, how would you sustain your living expenses, right? That's your mortgage, your healthcare insurance, your other needs, your car payments. How would you sustain yourself? Now, if you have a family now that depends on you, for food, for shelter, for clothing, if you got a disability, if you got cancer, you got a stroke, how would they survive if your income is not coming in anymore? If you have debt, right? We talked about a mortgage. If you're not able to pay your mortgage just for a few months, they'll kick you out of the house and repossess that, right? So how can you protect yourself and your family from this burden? So we did just highlight these key things that happen to all of us. You either live a long time, you get sick, or you die too soon, unfortunately. So we saw how, if you get sick and can't go to work, this type of life insurance can get you covered even while you're still alive, right? So if you get things like heart attack, stroke, cancer, you can be covered under your living benefit of critical illness. So actually the average age, at least in America, for this is 40s, right? So people are sick because of the food that we eat these days, not doing enough exercises. So people are needing these services early on, in life than before. And these treatments can be so expensive that several people do become bankrupt if they didn't have any other method of supporting themselves. So now, if unfortunately you're gone too soon and your paycheck is gone, how will your family survive financially, right? If there was already a mortgage and other debts, how will they continue going on without you? And we saw like happiness shared. Generally, especially parents, you want to keep it as comfortable for your children as possible. You want to leave a legacy for your children. So again, to put everything together, an index universal life insurance will cover you if you live too long in terms of retirement savings. If you get sick, you get living benefits. And if you die too soon, you do have an insurance that will make sure that your dependents are taken care of. So I mentioned to you earlier, the fact that you're here today is because you saw an invitation from somewhere. That we always put a contact information on our flyers. But if you would like to set up a one-on-one consultation free of charge to you, you can email our team at ibfinancialfreedom@gmail.com or contact any of the personal numbers that you saw on there. Today is the day, or the sooner you do it, you can lock in low rates while you're as young as you can be, protect your family and your future income, and then get the benefits that come with that growing wealth and living benefits for medical emergencies. Thank you all for attending this, and we'll be happy to take questions now. So feel free to put them in the chat. Our guest, Happiness, will be able to take them specifically if you want to hear more about protecting your young family, or if there are general questions, we're also happy to take them. This is your time.
Hello, hello, beautiful speakers. You did amazing tonight. Mine is not a question. Mine is just like saying thank you. You nailed it for sure. But I can't go without saying anything on this beautiful gift of life to our youngsters. And the speaker, Happiness, and you, Dr. Sharon, you said it well. It's never too late. It's never too late to start. Your child doesn't have to be 1 year. Your child doesn't have to be 2 or 10. Your child can even be 20 or 25. It could be even an adult. You can start. So the IUL as a gift of life, really, it gives our children that access to a financial base, like the cushion you were talking about, so that they can start growing their income. They can start growing their dreams when we are there. We don't need to leave some stuff when we're gone. We need to see them enjoying those actually the wealth, the generational wealth we're talking about. We need to see our children going to school without having taken the student loans we're talking. We need to see them living the same legacy to our grandchildren. What we actually, the plants we plant, the seeds we plant today are going to go beyond our children to our grandchildren and great-grandchildren. Because when we start our children on a strong ground, they are going to pass on the same legacy. So thank you for the great conversation. Let's keep this going. I'm sure the audience also is there to ask or add on what you've put in. This discussion is always on, as we were saying. We have this financial literacy and money matters every Thursday evening, 8 p.m. Central Time, the same place, the same link. If you have this link, it's the same one we do use every Thursday evening for the purposes like this. We learned so much. Myself, I learned so much. And thank you so much for the great presentation.
Thank you so much for those wonderful additional comments. We'll keep the floor open for any other comments.
Oh, sorry.
Go ahead.
I wanted to add something a little bit. So our children depend on us. When they're younger, they want you to feed them. When they cry, they want you to pick them up. Let's not just not just let them depend on us when they're young. Let our kids depend on us even when they're older. We are the ones who brought them in this world. They never asked to be in this world. So there is no reason for us to just bring them and then throw them to the wolves. No, 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 no. It's important that we bring them and we set them up. You don't have to be Rockefeller. You don't have to be the Trumps. No, little. It's very flexible. Just start as little as you can, but as long as the little that you're setting up your kid will make a difference. Will give them financial freedom when you're not here, or even when you're here. So it's very important to let our kids depend on us their whole life. We're the ones who brought them on this world. So there's no reason for us to just throw them, into the world with no help or cushion.
Those are great concluding remarks. And I see another comment in the chat. We need to shift from survival to legacy generations. That is very well said, right? So survival is living paycheck to paycheck, and depending on loans, but if there's already that cushion where you can use those funds for emergencies or just to get you started early on, that's always great.
Shy away from we cannot shy away from tools that are you call it complicated. IUL sounds too complex. I just want to do the basic. What I know to do, but nowadays, if you need to learn some of these tools, that's why communities like this are here and experts like you guys are here to break it down to simple language that we can all understand. Because the rich people have advisors upon advisors and heads of advisors to break down these things for them. Some of them never even went to school, but they have people around them that are able to find the loopholes, to find, some policies or products that can benefit them and their families and take advantage of those. So this is one of them that might look kind of complex on the outside, but then if you have somebody explain it to you and do an illustration for you, figure out how much you make, the type of life you want to live in your retirement, how many kids you plan to have, what schools you want to take them to, all those things, you calculate them, you put in the numbers, and it spits out how much you need to be saving. And it simplifies it. You just need to pay one payment, and when the time comes for you to collect your investment, they don't give you any hassle. There's a hotline you call, they give you whatever you've been investing. But if you never know about this, then it just goes to the person that puts in the work to learn it. So that's all I can say to add on to what you guys have shared. And I really appreciate everybody that was able to join and curious to learn how they can set themselves up better so they don't cry when it's too late.
Or set up GoFundMe accounts.
Yeah.
Can you imagine? And you've been working for 30, 40 years. It's not good for people. And unfortunately, because we come in this land and we're not used to this type of products and we're very wary of people and we don't want to ask information. That's a thing that I feel like a lot of immigrants have. You want to stay low key, you don't want to ask too much. Whereas the people who are here are very curious, they're learning. People are telling them, so and so is telling you, uncles are telling you. So you're exposed to that. But we gotta kind of learn that habit of asking for information, being curious, joining groups to learn more information that can be helpful.
That was
I just
very good
want to
comment.
share something.
Yes,
I just want to say you did a good job, Happy. She's my friend.
Thank you.
And I wanted to share a little bit about the insurance because I'm not in the US, but I experienced something similar in the Caribbean. We don't have IUL. We have another similar plan, but under another company. So when I returned home from university, as a student, you're not a student anymore. You start working, you start incurring expenses, renting, you're trying to invest, then you get informed about, and you can do insurance, and based on your age, you're given a what's it called, a premium, a desirable premium. So now inflation is on the rise, and so not everybody can afford, or maybe they can, but people are full up with expenses that sometimes they can't squeeze in just the premium, that monthly premium that they have to pay. And it would be nice that people would be educated or just be aware of this tool that will help build generational wealth, and you could start from very young. And I'm glad that to see that there are informational sessions that are going on, in the US. And I wish that that would happen, back home, where people are more aware of how they can build something. And just snatch that premium from like that age from when they're young, so that they can um build for when they're older. And so I just wanted to see, good job, guys, because and try to get more younger people to be involved and be aware of what's going on and how they can just build generational wealth. So yes.
Thank you.
Well, ladies, Dr. Sharon and the Miss Happiness, you all did a great job. You hit everything on the nail on the head. The takeaway will be the best time was yesterday, the next best is today, and today is the youngest you'll ever be. So that in itself is quite a bit of urgency to everybody that is listening in. If you haven't invested in yourself and your family, this is now. And we are learning as one immigrants how all these other rich families have been able to do it. It takes as little as $50 to start an IUL. It's not that much. You don't obviously you don't want to start at the bottom, but it is affordable. So we are here to transfer that knowledge, and it's not because it's because people do not know how to go about it. That's why this is very important, and we thank you for sharing that information. Thank you all.
You're very welcome. Thank you for the comment. So we are running out of time, but you can always contact us at the details that were provided earlier. I want to thank our guest again, Mr. Happiness, for being here, for sharing your experience with us, and we wish you a wonderful journey through parenting as your child is lucky to have a parent who is investing in financial literacy and using the skills that you're learning to get them started. So I hope all of us learned something today that we can apply to our own personal lives, depending on what status you are and where you are in life. Thank you, and see you next Thursday.